SAS Institute of Management Studies. My name is Akshada Vikas Thakur. I am from MBA Part 2. My presentation on corporate valuation, merger and acquisition, and my topic name is merger and acquisition. Index for my presentation is what are mergers and acquisitions, merger and acquisitions types, forms of integration, reason for mergers and acquisitions activity, forms of acquisition, merger and acquisition valuation. What are the merger and acquisitions? Merger and acquisitions refer to transactions between two companies combining in same form. Although mergers and acquisitions are used interchangeably, they come with different legal meanings. In a merger, two companies of similar size combine to form a new single entity. On the other hand, the acquisition is when a larger company acquires a smaller company, thereby absorbing the business of the smaller company. Merger and acquisition deals can be friendly or hostile, depending on the approval of the target company. Next, mergers and acquisitions or transactions. There are three types of merger and acquisitions. First is horizontal. A horizontal merger happens between two companies that operate in a similar industry that may or may not be direct competitors. Vertical. The second one is a vertical merger takes place between a company and its supplier or a customer along its supply chain. The company aims to move up or down along its supply chain, thus consolidating its position in the industry. And the third type of merger and acquisition is conglomerate. This type of transactions is usually done for diversification reasons and is between companies in unrelated industries. Moving to the next slide, it's forms of integration. There are again three forms. First, a statutory. Statutory merger usually occurs when the acquirer is much larger than the target and acquires the target's assets and liabilities. After the deal, the target company ceases to exist as a separate entity. Second one is subsidiary. In a subsidiary merger, the target becomes a subsidiary of acquirer but continue to maintain its business. Third one is consolidated. In a consolidation, both companies in the transaction cease to exist after the deal and the completely new entity is formed. Reasons for mergers and acquisitions activity. First is unlocking the synergies. The common rationale for mergers and acquisition is to create synergies in which a combined company is worth more than the two companies individually. Synergies can be due to cost reduction or higher revenues. Cost synergies are created due to economics of scale, while revenue synergies are typically created by cross-selling, increased market share, or higher prices of the two. Cost synergies can be easily qualified and calculated. Second one is higher growth. Inorganic growth through merger and acquisition is usually a faster way for a company to achieve higher revenues as compared to the growing organically. A company can gain by acquiring or merger with a company with a latest capabilities without having to take the risk of developing the same internally. Third one is stronger market power. In a horizontal merger, the resulting entity will attain a higher market share and will gain the power of influence prices. Vertical merger also lead to higher market power as the company will be more in control of its supply chain, thus avoiding external stocks in supply. Fourth one is diversification. Companies that operate in a cyclical industries feel the need of diversification. Their cash flows to avoid significant losses during a slowdown in their industry. Acquiring a target in a non-cyclical industry enables a company to diversify and reduce its market risk. Fifth one is tax benefits. The tax benefits are looked into where one company realizes significant taxable income while another incurs tax losses carry forwards. Acquiring the company with the tax losses enable the acquirer to use the tax losses to lower its tax liability. However, mergers are not usually done just to avoid taxes. Now, forms of acquisitions. First is stock purchase. In a stock purchase, the acquirer pays a target firm's shareholders cash or shares in exchange of shares of the target company. Here, the target shareholders receive compensation and not the target. There are certain aspects to be considered in a stock purchase. A acquirer absorbs all the assets and liabilities of the target, even those that are not on the balance sheet. The receive To receive the compensation from the acquirer, the target's shareholders must approve the transactions through a majority vote, which cannot be long process. Shareholders bear the tax liability as they receive the compensation directly. The second one is asset purchase. In a asset purchase, the acquirer purchases the target's assets and pays the target directly. There are certain aspects to be considered in a asset purchase, such as since the acquirer purchase only the asset, it will avoid assuming any of the target's liability. As the payment is made directly to the target, generally no shareholders approve is required unless the assets are significant. For example, greater than 50% of the company, the compensation received is taxed at the corporate level as capital gains by the target. Method of payment. There are two method of payment: stock and cash. However, in many instances, merger and acquisition transactions use a combination of the two, which is called a mixed offering. It includes both stock and cash. Stock. In a stock offering, the acquirer issues new shares that are paid to the target's shareholders. The number of shares received is based on an exchange ratio, which is finalized in advance due to stock prices fluctuations. The now cash. In a cash offer, the acquirer simply pays the cash in a return for the target's share. Merger and acquisitions valuation. In a merger and acquisition transaction, the valuation process is conducted by the acquirer as well as the target. The acquirer will want to purchase the target at the lowest price, while the target will want the highest price. This valuation is an important part of merger and acquisition as it guides the buyer and seller to reach the final transaction prices. Below are three major valuation methods that are used to value the target. Discounted cash flow, it is also called a DCF method. The target's value is calculated based on future cash flows. Second one is comparable company analysis. Relative valuation metrics for public companies are used to determine the value of the target. Third one is comparable transaction analysis. Valuation metrics for past comparable transactions in the industry are used to determine the value of the target. Thank you so much.